Hello, everyone. Welcome to another episode of Sam's Corner. Today is May 13th, and this is another segment I want to kind of start doing called Market Watch. And I want to just talk about where we are in the stock market, what's going on, and just kind of my views. This is something new for me, and I feel like it's a good thing to do. So, let me get started. So here's the thing with the stock market and what's going on right now. Some analysts feel that the markets are overpriced. Some feel that it's underpriced. Some feel that that the stock market is quote unquote a sure bet. And the reason they feel that way is because of the stimulus packages that have been coming in and that money's been flowing into businesses. And they feel that investors feel that, well, hey, if I'm investing, yes, there's risk associated with it, but if the company experiences any type of turmoil, the government is going to help them out. And I feel like right now with the markets are, and then also people are optimistic. People are optimistic about a vaccine, and there's also another possible, probably most likely is going to happen, another stimulus package. They're talking about possibly 3 trillion that will give Americans another round of deposits that are set to help businesses, etc. And so with all of those things going on simultaneously, investors feel a sense of optimism. One thing I want to point out as I get back onto my topic is not all companies are doing bad in this economy. And as an investor, I'm trying to look at that. I'm looking at what companies don't need a bailout and why. We understand that certain industries, such as transportation or the airline industry rather, people aren't flying. We know with cruises, people aren't taking cruises. We also know that most people aren't traveling. Oil prices are at record lows, all of these things. But I want to focus on what are the companies that don't need the bailout and what are they doing moving forward. Because I'm going to tell you like this, they are going to be the true market leaders of tomorrow. The companies that don't need a bailout, the companies that have a lot of liquidity, and liquidity is just basically a technical term that says they got a whole lot of cash and access to it, or access to lines of credit, which a lot of these bigger companies like Amazon, Starbucks, countless others do. So I want to look at them. The question that the analysts are going back and forth and asking, should people be investing? Some of them are investing, some are not. Some are doing short options, and I'll go into that in options and stocks and all of that in another video. I'm actually going to do that really soon. I feel like this. I feel like if you're investing for the long term, you would want to more place your bet or hedge your bet with these market leaders for tomorrow. Why? Because I'm going to tell you like this. Unfortunately, there are a lot of companies that aren't going to make it. The retail industry is not going to be the same. And I'm going to tell you this. Amazon has positioned itself to be nothing more than a distributor. And in that regard, they have dominated the market. Apple has done the same thing. A lot of these companies have dominated world markets. And so these are going to be the true leaders of tomorrow. We're going to see a lot of small companies go out of business and maybe some medium size as well. And here's another thing, because this has come up even today. Companies wanting to buy out other companies and these anti-monopoly rules. So Senator Warren and AOC are like, no, we need to encourage these anti-monopoly laws. We need to make sure these things are in place because we don't want companies to grow too large. Here's my take on what's going to happen. Some mergers will be blocked and others won't. And I'm going to tell you this, a lot of companies are going to come with, if we don't merge and if we don't grow, there'll be more Americans that are out of work, more Americans that are unemployment, and more Americans that will require assistance. But if we're able to buy out these companies, if we're able to merge, then we would be able to stop a majority of that fallout. and have more Americans working versus on unemployment. And I'm going to tell you this, that argument is going to win the hearts of a lot of people at this present time, as millions of Americans are on unemployment. Because a lot of people work in the service industry and other industries, and that's how it goes. So I think we're going to see a lot of mergers. I think we're going to see even fewer companies existing. Some companies are going to have to merge in order to survive. So I think we're going to see a lot of consolidation in various industries over the next couple of months, because as this keeps going on and on and on, companies are like people. They only have but so much money. And after a while, they're going to have to do something. And they don't want to close. And so the thing is a merger. But also that creates another opportunity for these larger firms to buy companies at a drastic discount. Because they're like, look, you need the money. You're not going to get a better offer on the table. You should just take this deal. And that's probably going to happen a lot in a lot of closed door meetings. So overall, in these next couple of months, and I think even 6-8 months, we're going to see the announcement of a lot of either mergers or acquisitions, and there are going to be a lot of bankruptcies. I mean, I'll take Macy's as an example. Macy's is an established brand. Everyone knows Macy's. Macy's have these large department stores and they sell everything. But here's the thing. They've always sold a whole lot of stuff, and every week they're running a sale. You can get this coupon, you can get that. So what happens is, when you don't price your inventory correctly, or you don't have an inventory system in place, you have too much. So you're trying to get it out. Macy's was already not doing well. Gap was another one. A lot of these major retailers were struggling as it is. And so now a lot of them are going to have to file for bankruptcy, and some will hopefully reemerge. But I'm thinking that even if some of them they do, the only way they'll probably exist is with an online presence, and maybe one or two or just a handful of physical locations. I think that we're going to see a big shift and not as many retail jobs anymore. I think what we're going to see is online sales. We're going to just see that a lot of them are not going to have these brick and mortar stores. And of course, that affects real estate, because these companies, most of the time, they don't own. They're renting or they're leasing this space. So given this current economy, we're going to see a lot of shift. But my advice, I can't tell you what to do. I always say, seek a professional. But I'll tell you this, you're going to want to invest in those companies that are COVID-19 proof, so to speak, in the sense that they're still able to operate, they don't need government funding, and they have a lot of liquidity. So that's my take on what's going on in the market. I hope you all find this useful. Of all the videos, I kind of like doing these. It gives me a chance to, put some of my knowledge out there and some of my thoughts and views. So no matter what, when it comes to investing, always do your research, learn as much as you can, and just always be informed. So everyone, have a good day. Thank you for watching, and I'll see you next time. Bye.